This is not financial advice. I just hope you watch your oven mitts, baby, cause it's about to get hot in the kitchen. Now hit that like button to show your boy some love. Hit that notification bell to stay tuned. Let's get straight to the point. Subscribe to the channel. And the first banger on the list is the one, the only AMC Entertainment, ticker symbol AMC. And at the time of this recording, AMC is currently $34 a share. You already know we got in this back when it was $12 a share, baby. On the day, AMC is down 2%. And after hours, it's down another 2%. However, on the year, it's up over 680%. Let's go. But let's update on the put options, baby, because you know I just don't have it in my heart to leave you uninformed. Now, a put option, when you buy one of these, the Discord family already know, this is how you make money when the stock is going down. Now, take a look at this. The BNGO $6 put, we basically made 20% on that. We basically in and out of that. This one is done for the week. Now, shout out to my guy Rob, who made 30 or actually 43% on that charge point put option. Let's put him down. Let's get it, baby. If you want to make money when the stock is going up or coming down, guess what? Hit that Discord link in the top comment, baby. We're going to welcome you with open arms. Now, what's going on with AMC? I want you to take a look at this because Citadel has been doing this for years, and they are actually a pro at this. Anytime that you get good at something, you probably practice it a lot. Watch this, family. It says Citadel Securities closed Apogee dark pool, sources say. Now, this is from 2015. Watch how deep the history go, baby. Watch how deep the history go. It says, why did they close it? They closed it to focus on another of its off-exchange trading platforms called Citadel Connect. I want you to remember that name, Connect. Now, what is a dark pool? For those of you in the back who missed this lesson, take a look. A dark pool is a private, organized financial forum, aka like an exchange, where you can trade stocks and securities and so on and so forth. However, take a look at these key points. It says it gives certain investors, aka large institutions, the opportunity to place large orders without publicly revealing their intentions. And look all the way here on the bottom. It says dark pools lack transparency, they're susceptible to conflicts of interest, and last but not least, they are predatory trading practices that happen with high frequency trading. This is their words, predatory trading practices. This is the official definition, family. I didn't make this up. Now take a look at this. Now, FINRA said this, just so we clear on this. FINRA said this. And who is FINRA? Watch who FINRA is. FINRA is the Financial Industry Regulatory Authority, aka FINRA. What do? They enforce the rules governing brokers and retailers, basically like Robinhood and Citadel. Now, what is their mission? It's to safeguard investing public and basically stop fraud from happening on the stock market. This is their job. Now, what did they say? And they said this on Reuters, right? Remember, Reuters is one of the most credible sources when it comes to financial information. Take a look at this. FINRA said, Connect, Citadel's Connect is averaging around 5 times the volume that their Apogee dark pool had. And this is back in 2015, family. The history runs deep. And a person who chose to remain anonymous, because you know what happens to whistleblowers on the stock market. You just seen what happened when people flip-flopping and moonwalking the other day, right? But he chose to remain anonymous, or she, because this information is not public. Now, Connect is not classified. If you hear anything in this video, I want you to hear this. Connect is not classified as an alternative trading system and does not have to report to FINRA. It does not have to report to FINRA. So now we got an answer to one of the questions that we've been asking for months. Take a look at this. When you go to the dark pool percentage and look at all of the trading that's happening, family, look at this. Just on the 15th, there was 63.4% trading done. Look at this red rectangle right here on the dark pool. You look at that, it was 63.4% again under it. And then under that, basically on the 13th, 65.7%. But look at this. Not available. And then 64.9, and then the reporting again, not available on the bottom. So we have 2 times where it wasn't reported. Now remember, if it's looking like a duck, it's quacking like a duck, it's probably Citadel Connect. Citadel Connect, let's read that again. Connect is not classified as an alternative trading system and does not report volumes to FINRA. That's absolutely crazy. And just to put the icing on the cake, family, just to put the icing on the cake, how we've been talking about how they are rerouting our buy orders and putting all of our buy orders off of the exchange and then impacting the supply and demand and keeping the price artificially down. Here's the nail in the coffin. Here's the nail in the coffin. I hope you brought your oven mitts. Citadel, and watch this. This is Reuters again. Super credible source. In Connect, Citadel makes active retail orders it has bought from retail brokers like Robinhood available to large institutions. So watch what that means. It means this. very few, and this is in green on the bottom, very few of the retail orders basically placed by the broker, guess what? Very few of them go through stock exchanges such as the New York Stock Exchange. So very few of them. This is according to Reuters. Very few of them. What does that mean? They are taking our buys and putting it over on their not dark pool, right? Their not dark pool, which is Connect. Connect is basically like when you have those glasses and with the mustache on it, it looked like a dark pool, but it's not a dark pool. It's exactly that, baby. It's exactly that. And remember, how successful has Citadel gotten off of this? They became a $35 billion company. Look at this. They have this many assets under their management, $35 billion in USD. Now, let's take a look at this. Another thing. So Citadel pays the SEC $22.6 million to settle charges for misleading customers doing what is known as latency arbitrage. And it's the practice of trading different prices between fast and slow exchange data feeds, family. Latency arbitrage. Now watch this. Watch this. It says that Citadel Securities delayed certain equity orders from their clients to buy or sell shares while Citadel was continuing to trade the same stocks in its own account. AKA, they stopped all of your buys. For example, hypothetically, allegedly, nobody's trying to get sued, right? They stop all of your buys, but they continue to sell, bringing the price down. Take a look at this. And FINRA said this. This is according to FINRA. FINRA said this over a 2-year period where they marked this. Basically, Citadel removed hundreds of thousands of orders from its automated trading, and it listed it as inactive. They had robots and algorithms basically calculating all of the trades, so then they listed them as inactive. And what did they do? And remember, these are your buy orders. They did this. It rendered the orders inactive so that they had to be done by hand, manually by humans. So imagine, for example, what we're reading right here is that what they could be doing. This could be a buy or a sell, right? But imagine, what are they probably doing? Taking the buy orders and basically rendering them inactive, so then the buy orders are done by hand, but the sell orders are basically done by algorithms and just pressing the price all the way down. And remember, none of these ideas originated with me. This idea originated with Stacey Cunningham, the president of the New York Stock Exchange, one of the most credible people in the game when it comes to this. And she said the vast majority of order flow can trade off of exchanges, which led us down this path. And you know, I had to come with the receipts and back up everything that she was saying with all of the receipts and do all of the research. And then she said the price formation, aka the price, is not reflective of what supply and demand is. It's not reflective. Now let's look at what's going on with FINRA again, because I want you to keep the microscope on FINRA. Take a look at this. FINRA, this is how they report when that information goes over to the dark pool. Pay attention to this closely. We got to put some wrinkles on that smooth brain. Here we go. The dark pool dollar position over on the dark pool is calculated like this. The short volume minus the buy volume. So, for example, let's say there was $1 billion worth of short positions happening over on the dark pool. However, there was $10 billion worth of buying happening over on the dark pool. Let's call it $1 billion worth of selling for simplicity, and then $10 billion worth of buying. So what number should you expect to see? Take a look at this. 1 billion of selling minus 10 billion of buying is going to get you negative 9 billion. Why is that important? Bow! Look at July 16th. Over on the dark pool, the volume in dollars is basically at $9 billion over on the dark pool, family. Why is it important? Because this is evidence that there could be $10 billion worth of buying happening over off exchange, and then $1 billion worth of selling. This is what the data is telling us right here. And again, why this is important, take a look. AMC is only a $28 billion company. Imagine what would happen with about $10 billion more of buying pressure on the New York Stock Exchange where we are. Then look at this. On the 25th, the dark pool said basically that there was negative $30 billion over there. How do you get a number like that? This could very well be, let's call it $10 billion in selling, and if my math is right, about $40 billion in buying, which would get us basically that negative $30 billion in basically June 25th. That's a lot of buying for a company that's basically $28 billion in market cap, family. Come on, let's talk about it. This is probably why you're seeing all these failed to delivers that happened in the $50 and $60 range from June 15th all the way to June 30th. Just 4 million, 3 million, 2 million, 4 million, 4 million. All of these failed to delivers, family. Come on. If it's looking like a duck, it's quacking like a duck, it's probably a duck, and they're most likely, more than not, like I just showed you with all of the facts, basically basically using all of our buys and keeping the price down by keeping it off exchange, not on the dark pool, right? On Citadel Connect, which is not the dark pool, it's the dark pool with the glasses and a mustache for like a disguise. Now, again, if you can't handle the heat of these hot stocks, then stay out of the kitchen and consider investing in the index funds, baby. I love y'all. Take care.